Thanks, Terry. And for more on this very hot topic of short selling, I'm joined in the studio by FinCEO's CEO, Dr. Martin Fay, and Rick Steele, the CEO of TechInvest. Now, FinCEO is the body representing financial services professionals. TechInvest is a hedge fund specialising in global securities, and Mr. Steele has held positions in funds management, economics and treasury. He now sits on the regulatory committee of the Alternative Investments Association. Gentlemen, thanks very much for joining me. Now, Martin Fay, if I can start with you, what are the rules here in Australia, if any, governing short selling?
We've got two regimes around short selling, one which is where the regulator controls short selling, but the sort of short selling using stock lending or borrowed stock falls outside that regime, as a result of which much of the liquidity that we see in the Australian market comes on the back of borrowed stock. So what we have is borrowing stock from custodians and other funds and using that to effectively short the stock in question.
So you're saying that's what's been happening in recent weeks and months? It's mainly the borrowed stock and therefore it falls outside any rules?
Yeah, it's mainly that sort of stock borrowing that we're seeing, and that's where the shortings come from. And that gives us the incredible liquidity, which is the hallmark of the Australian market.
Now, so how do the rules differ then with the United States?
The US has a pretty similar regime. Where the real differences are within the Asia-Pac regime, where historically some markets like Malaysia and Taiwan have been quite restrictive, but even they have in recent years have recognised the benefits to liquidity from relaxing the short selling regime. Okay,
now what about this rule about buying in an uptick?
The buying on an uptick is an interesting one. It doesn't appear that that's something that actually comes under consideration in the Australian market. And in recent weeks, I think what's really caused the confusion...
So there is no uptick rule in the Australian market?
Not really, no. And what we're seeing in this sort of scenario here is the combination of the stock borrowing, the shorting and the so-called margin lending.
OK, now Rick Steele, if I can bring you in here. The hedge funds, just before we go on to short selling completely, the hedge funds have this image that they are big risk takers, they are a bit secretive, they take very big positions. Is that what a hedge fund is today?
Well, I think there are some hedge funds that are more likely to take risks than others. Our particular approach, for example, is much more traditional, and we take a fairly low-risk approach.
What does traditional mean with hedge funds?
Well, the first hedge fund was actually launched back in 1949 by Alfred Winslow Jones, and his idea was to identify...
He was Australian, as I understand, and went to the United States when he was 4 years old. Anyway.
His idea was to identify stocks that he felt were good value to invest in, but offset the market risk of those by identifying stocks that were overvalued and less prospective, and he wished to short sell. So the net effect was that there was no market risk, simply the risk of his stock picking.
In these last few weeks and months, is it the local hedge funds who are short selling, or is it mainly overseas?
In the Australian market? I think the Australian market, if you look at the downdraft we've seen in markets, is not too different to what's happened around the world. I think since October, the Australian market may be down 15 or 16%, and if you look around other world markets, it's pretty similar. So I think what we're seeing here is a drop from that enthusiastic level of pricing to more fair values in stocks generally, and hedge funds are just part of that overall process.
But are they local hedge funds who are engaged locally, or are the big overseas hedge funds also engaged in the Australian market?
Well, that may be a question that Martin can better answer. We're a local fund, in fact, investing in offshore markets. You're asking about offshore funds investing in this market.
Martin, what do you think? Is it mostly overseas action coming down here?
It's a combination of the two. Remember, the Australian market is an incredibly open market, and the liquidity attracts activity down from Hong Kong and Singapore, and there are a lot of funds in Hong Kong who like the Australian market. There are a lot of equities on the Australian market as well, which are very, very attractive. There are some very, very well-run companies in Australia. The BHPs, the Rios, our banks are very well regarded. This is an attractive market to play in, and therefore it's traded internationally.
All right, when you say it's an open market here, that's how we're considered overseas, do you really mean that because there are no rules, it's a little bit open slather?
It's important to recognise that there are really extensive set of rules around the operation of markets in Australia. We have a first-class regulatory regime combining ASIC, APRA and the ASX, and it's quite heavily regulated in a light-handed way. It's not overly prescriptive, and I think we need to be careful. This is an outstanding market where companies like to trade.
There has been a lot of talk, and I guess this is the nub of where I want to get to today. There's been a lot of talk about hedge funds sniffing out when a margin call is due on a director's loan, and then they kind of go in for the kill and drive the stock price down. Martin, is that fair enough criticism? Or in a sense, are hedge funds really trying to find the correct value of a stock?
I would tend, on balance, to fall into the latter category. I believe in the current turmoil where organisations have taken on large amounts of debt, that leverage is now attracting higher interest repayments, and the underlying earnings are suffering as a result. So there's an inherent repricing of these stocks. Hedge funds, as sophisticated, very often informed viewers with a long view, are able to identify where repricing needs to take place, and as a result, they very often come in to short the stock. The fact that that margin lending is associated with this is another issue, which the ASX and ASIC came out on yesterday.
Yeah, and they are wanting to really, handle that a lot better than they had been in the last few weeks. But Rick, can I ask you? I mean, hedge funds do drive down the stocks, and that can hurt a lot of ordinary shareholders.
Look, I think that's a correct point to make, except that it's not a riskless position for the hedge fund manager, because at some point they have to buy back the stock, and if they buy back the stock at a higher price, then they carry a loss in so doing. I think if there is a villain in the piece, the villain is that there's been an over-reliance on long investing, and it's created levels of prices which are above a fair or equilibrium value. And so what short selling actually does, it's the saviour in the sense that it
now this is not a word that we've heard associated with hedge funds in the last few weeks. Is it a saviour? Okay.
Yeah, I think it's a saviour for the market in that it helps bring prices back to equilibrium. And it's a saviour for investors because they can invest in products that actually can carry risk protection by having short selling in place.
All right, so you're really saying that there was too much of a bubble, and it does have to come back to realistic prices. So short selling, that's all it does.
And you could argue that without short selling, maybe the crash would have been bigger.
Okay, just really briefly, would you oppose, Martin, any moves to regulate short selling?
I think we have to be very careful that we don't have a knee-jerk reaction at this point in time, because we're confusing it with the margin lending. I think I would generally be against over-regulating and regulating short selling. Let's see what's happening, and let's take the benefits of short selling in arriving at equilibrium prices. Okay, we will have to leave it there, gentlemen. Thanks so much for joining us, Dr. Martin Fay and Rick Steele. Pleasure to have you in.